come into the room. So welcome so far. Hello, hello. Maybe you guys can let me know as you're coming in. Let me know if you joined us before, if you joined me before, if you know who Tradewituf is, if you know who I am. Maybe you've joined Swing Shots before. Maybe you've joined one of my other colleagues. So let me know in the chat box. Let me know whether you've been with us before, and maybe as well, let me know how new you are, or I guess veteran you might be in trading in general, or trading Forex in particular. Are you new to trading? Have you been doing it a long time? Do you follow us and trade the way that we trade, or do you trade a different way? So let me know in the chat box just for the first couple of minutes whilst people are coming in here. So let's just have a look there in the chat box. Okay, nobody so far. Don't be shy, guys. I like the interaction. It gives me something to sort of talk to you guys about, and sort of understand where you're at. Obviously, if more people are completely new, then I'll slow it down a bit. If more people have been doing it a long time, then I'll speed it up a bit. So let me know on the chat box there if you're new to trading, if you've been doing it a long time, and then as well whether or not you've been following us at Tradewithufos, or been in any of the sessions that we do, so that you know how we trade, or maybe this is completely new to you as well. So again, let me know there on the chat box. Whilst we do that, I'm going to just make sure that it's there at the top. So those are the disclaimers being highlighted there. Now, of course, we need to put them there, not just for legal reasons, but it's important for you guys to understand that, of course, when we do these kind of sessions, and it might be me doing it, or it might be one of my colleagues doing it, whether we do Forex sessions or whether we do stuff on YouTube and futures or stocks or whatever, of course, we are showing you a demonstration on how we use the product. It's not, you know, necessarily meant for you guys to just copy. It might be that it doesn't fit your trade plan. If it does fit your trade plan, it's obviously up to you to decide whether or not you do take it and how much you put on it and things like that. So those are the disclaimers there. Now I'll just get going now then. So again, for those guys that are coming in now, just let me know in the chat box where you're at in terms of Forex trading, and where you're at in terms of Tradewithufos, if you've seen this kind of thing before. So in the meantime, my name is Becky. If you turn your head slightly to the side, you will see my my email address there, becky@tradewithufos.com. There's also tradewithufos.com/Becky, which is this link that we have here. Now, I prefer this link for you guys to get in contact with me, and I'll show you why. If you go to that link, you'll come to this page and you can set yourself up a free membership. So just name and email address, go through the steps, and you've got a free membership. Once you've got that, you can come down here and ask questions in a public setting, which means that if other people have that question, they're going to see the answer. So you ask in a public setting, I answer in a public setting. So it's kind of helpful for the whole community. And it might be that you come down here and you realize that the question you're about to ask somebody else has already asked. So it saves you time writing out a question that might be answered down here anyway. So again, helps the rest of the community for you to be able to ask questions in a public setting. So just go to tradewithufos.com/Becky, get yourself set up with a free membership, and then you can do that there. Okay, so just to come back to our intro screen here, as you can tell, we are, or hopefully it makes sense, we're doing swing shots here, so we're doing swing trading. Now, in my opinion, Forex is sort of better for swing trading. Bigger timeframes, I think, tend to work better on Forex. That's not to say you can't do well day trading, it's just a bit more difficult. The bigger the time frame, the more orders there are. The bigger the time frame, normally the more strength there is. The smaller the time frame, especially in volatile markets, can be a little bit more risky. But again, not to say that you can't do well there, it's just a little bit more difficult. So for me, I focus on swing trading. I'll look from anything from sort of short-term swing trading to swing position trading. Those are the time frames that I'm going to be using. So when it comes to the trade we put on last week, so can you guys let me know if you were with me last week? But I'll show you here. This was a trade that we put on last week on the Euro Swiss, or a week before, yeah, 2 weeks ago, the Euro Swiss franc. So just to very briefly explain what we did and why we did it, we have down here on our left-hand side chart, which is our daily chart, we have an auto climate. Our auto climate tells us where we have probabilities. Do we have probabilities to the upside? Do we have probabilities to the downside? Or do we have no probabilities at all? At the time that we placed this trade, so it was a couple of weeks ago, so today being the 24th, that would have been the 10th. So at the time we placed the trade, which would have been here, which is also the day that it triggered, we had an upwards climate. So confirmed upwards climate, we were looking to go long. That's what we did. Now we had a safety target at this price, and we had a final target at this price. Now price came in, as you can see, round about here, which would have been the 10th, maybe shortly after we put that on, and then it shot off and went all the way up here so far. Hit our safety target, hit our final target. So a profitable trade on that one. Now, just a couple of things to note, because depending on whether or not you are a set and forget trader, which I tend to be a set and forget trader, you may have cancelled this trade actually before it hit target. You may not have cancelled this trade. It depends on whether or not once you put a trade on, you just set it and leave it, or whether or not you're actively monitoring your trades. Pros and cons of both. So if you'd have been monitoring this trade, and maybe you looked at it on the 11th price had just come into that area, and we had an unconfirmed climate, which means lack of probabilities. So at that point, you may have said, right, I'm going to get out of this trade. I'm going to sort of cut my losses, and it's just inside that area between our entry and stop. So maybe you would have taken a few pips loss, and you would have been okay with that, because why would you want to be in a trade where you don't have probabilities? Now, obviously, the downside of that is that it became a confirmed upwards climate from there. So on this candle here, which would have been this one, I guess. There you go. That's where it started to confirm itself at this point. So if you'd have checked your trade any time between those few days, you may have cancelled the trade and therefore missed out on the profits. Now, that's obviously very frustrating when we then see that it would have shot off and it would have actually created new UFOs and given us more opportunities and shot off to the upside, hitting our targets. So frustrating if you'd have got out of it. But the flip side is it could have just as easily, when we started to lose probability, it could have just as easily come straight through that UFO. So by monitoring our trades and maybe getting out if the climate changes before a conclusion to the trade, it might save us losing our full amount. It might stop us hitting our full potential. And that's up to us as individual traders to figure out whether or not that's something that we're willing to do. Would we rather take the risk once we're already in the trade and say, okay, I've already decided I want to risk $50, $100, $20, whatever it is, and I'm okay to lose that in exchange for the amount of money I'm willing to make on my, or likely to make on my profit targets? Or will we somebody that says, if I lose probabilities, even though it could change and get back into that direction for me, I don't want to take a risk that is not, that doesn't have probabilities that it will work out. So again, that's up to you as a trader to figure that out. In this case, if you did set and forget the trade, then great, you would have hit your profit targets. If you did come in and monitor the trade and cancelled it around about here when it was sort of hovering around the entry mark, you might have got out for a slight profit, a slight loss, maybe break even, depending on which day you would have come in and closed the trade. And again, up to you to figure out how strict you want to be on that. So hopefully that makes sense. Again, guys, I know you guys are shy on the chat box. I don't know why on FX Street it's always quiet. So let me know on the chat box there, guys, if you're following me, if maybe you trade with UFOs anyway, and you understand this kind of thing that we're doing. You understand also climate, you understand UFOs. If it's completely new, let me know that as well. And again, I can expand as I need to. So with this trade that has closed, obviously this would have been a trade either, like I said, that we closed round about break even plus or minus a couple of pips, or we would have hit our profit targets here, depending on what you did there. Moving on to new opportunities, looking for new trades that we could be taking. And again, we're sticking to swing trading, so swing trading time frames. So before we want to do anything, I like to go to the to be aware of what volatility might be coming into the markets. So I don't make my decisions on my trading based on what the news says. A lot of the times price is already kind of reflective, it's already worked in what the news is likely to be. But for me, I like to know that there could be high volatility in certain markets. So for example, tomorrow we have high volatility on the US dollar. These are all in times, by the way, is Eastern time. So 8:30 a.m. Eastern time. So tomorrow we've got a few things coming out at the same time that could create high impact, high volatility on the US dollar. So perhaps for the sort of US market open time, you might want to, I don't know, close some trades or reduce your risk, or take out, if you use multiple lots, maybe take out some profits if you're in profit, maybe put trailing stops in, tighten your risk. You might choose to not ignore it entirely and just trade anyway. But for me, again, I like to be aware of, I could have high volatility. So if I'm trading pairs that have the US dollar in them tomorrow, I might just want to be aware around about that time to reduce my risk, or not being many US dollar trades at the same time. Maybe try and be in some cross pairs as well. Okay, so hopefully that makes sense. Now from here, I like to use the TradeStation here and have a look at the scanners. Now, why do we use that? It's just quicker. There are, as you see, many different timeframes we could be using, and many different currency pairs we could be using. So rather than go through each one on the different timeframes that I'm happy to look at, before I then decide whether or not I've got a decent enough trade, why not just let TradeStation do that for me, scan through it and tell me, hey, this is where you might want to be looking. Now, today actually looks like there's not very many opportunities on the bigger time frames. Actually, even on the smaller time frames, there's only a couple. So let's just have a quick look. So we have on the, let me just, there we go. Cool. So we have on this scanner, we have these yellow boxes. So again, for those of you that might be new, I'm just going to explain it. Let me know again if you guys have been here before and you've heard me say this a million times, let me know. So for those of you that might be new, we have our yellow sort of flashy boxes here. What are they for? These are literally highlighting to us, you have opportunities that could be close to you. So I want to be looking at those things, because I don't want to be wasting my time placing trades that, yeah, might have good probability, but they're quite a way away from entry, which means I might not ever get into them, or by the time I do get into them, the conditions might have changed. So then I have to put in more time and effort to then go and maybe cancel or modify those trades. I'd rather be placing my time and energy into looking at trades that are closer to my entry, closer to getting into the trade, to getting into that. Just reading there from Ray. So nice to listen to your trading on FX Street. Nice to see you too, Ray. It's been a while. Yesterday was Sam Side on FX Street. Oh, hey, both from home times at CMT. Yeah, it's you know, there's loads of different ways to trade. I always think about it this way. There are loads of ways to do things, whether you use technology to do it, whether you use, Sam's obviously very skilled with his eye, he's been doing it a very long time. However people do it, you know, follow the people that make the most sense to you. If they explain it better and it makes more sense to you, then great, do that. Trading is hard. Trading is something that will challenge you psychologically. So having people and mentors around you that make sense to you and kind of help break it down for you, help you use technology, or help you use a skill set that makes sense for you to then do it consistently. That's the most important thing. Sometimes we might follow sort of trading gurus that trade in a way that just doesn't fit us. Maybe they trade on timeframes. That's not really what we should be doing based on our temperament. Maybe they're trading markets that we don't have the capital for. Maybe they're trading in a certain style that just doesn't make sense to us, or requires us to go through too many variables or too few variables, depending on how we feel and what we're like. So don't force yourself to do something just because somebody tells you to do it, just because you think, oh, they've been trading a while, or they're using technology that helps them, or whatever. If it doesn't make sense to you, don't do that. Find somebody that does. Find something that does work for you in a way where you are likely to consistently apply that every single day. Whether that's what we do here, whether that's Sam Seiden, whether that's anyone else, really, it's just about being consistent. Now, what happens a lot of times is people will flick between different styles for different trades on different days, which means there's a lack of consistency. If you're not consistent in your action, you're likely to be inconsistent in your results. So again, find a way that works for you. Be consistent at applying it. It's okay that you might be watching somebody on YouTube that's been trading for 20 years and not like what they're doing, and find somebody else. That's fine. Just again, be consistent with whatever you choose to do. So anyway, long way around. Hi, Ray. Right, okay, so let's have a look here at these sort of flashing yellow boxes that we've seen here. Now, you might have noticed some of them have changed in this time. In fact, we only have a couple of opportunities on the big time frame. So the reason I say that is because you might be thinking, okay, well, you've got 3 here, you've got 1 here, you've got 1 here, you've got a couple there. But notice on those yellow boxes, the wording. So the wording can say either near sensible, long or short, or it can say near hopeful long or short. Now, as traders, we don't want to be trading something that's hopeful. That kind of doesn't imply probabilities, does it? Doesn't imply that we have statistics on our side. If it's hopeful, it's it's not really something we want to be doing. So we want to filter this again by looking at sensible. So in terms of sensible options, we have these top three here on smaller time frames. Those would be quicker trades. Top three here, one here, and then one here. So that rules out those top two. These are now not worth looking at. Now there's something extra here because again we're looking at these different opportunities, but I'm telling you we've actually only got a couple that are worth looking at. Again, why is that? We now come over to this side here. By the way, guys, if you want these scans, we can send them to you. So just email us, support@tradewithufos.com, and we will send you these scans so you can have them in your own TradeStation to use them. So we have in these columns, we have red boxes, blue boxes, and grey boxes. So again, what's the significance? The blue box would tell us that we have a confirmed upwards climb. The red box tells us we have a confirmed downwards climb, so probability to the downside there. A grey box tells us we don't have probabilities either way. So again, we don't want to be looking at trades or wasting our time looking at opportunities if we don't have probabilities either way. So in this case, this first one, near sensible short, and it's a confirmed down climate. So again, enough probabilities to be looking at that. But the one underneath it, near sensible short again, but it's a grey box, lack of probabilities. So we don't want to be looking at that, no point. Again, one below it, near sensible long, we've got a thick blue box there. So again, probabilities that upside worth doing. These top two in this 240-minute climate section, they're both grey, so we don't want to look at that. So the only one we can look at here is that one. So now we're kind of ruling these out. We now have two opportunities in this first section, one opportunity in that second section. This section here, that's a grey box, so we ignore that. So we don't have one there. Nothing on that top bit anyway, because they were hopeful, and then this one, which is a near sensible short. So on the bigger time frames, we have 1, 2 opportunities to be looking at. If we want to go down to smaller time frames, maybe other things don't line up, we'll have a look, and then we'll come down and look at these smaller time frames as well. So hopefully that makes sense as to sort of drilling this down, and it means that we're only going to focus our attention where we have the probabilities to be doing that, rather than wasting our time clicking through loads of different currency pairs before we realize that there's not enough probabilities, or there's not close to an entry or something like that, and then we kind of wasted our time. So we use those scanners to just sort of help us with that. Again, if you don't have TradeStation or you don't want to use that, click to watch it, so just take you a little bit longer. Okay, so I'm going to start with this daily climate, only because we're using we're swing trading, right? So it's slightly bigger time frame. So our daily climate here, this is the dollar Singaporean dollar, which is not something that we look at regularly, but hey, why not? So let's come back here to Trading View, and we'll look at USD, SGD, Forex. Check that. Okay. Okay, so I'm just gonna first of all, I'm just gonna unconnect to TradeStation here, just so we see when we place the traders, we'll pay for trading through Trading View. Okay, cool. Because obviously, as you guys might know, TradeStation themselves are not a Forex broker. So if I was connected to TradeStation through Trading View, that's great if I'm looking at stocks or futures to then place trades through Trading View that then route through to TradeStation. But if I tried to place a trade, even a simulated trade, on Trading View whilst connected to TradeStation, it wouldn't let me do that because TradeStation are not a Forex trading broker. Hopefully that makes sense. Okay, so now that we're looking at our chart, we now need to be figuring out, okay, do we have probabilities on our side for a short here? Now we know that we have some probabilities, enough for the scanner to tell us, but we want to make sure other things line up. So first thing to look at, and just double confirm, we have a confirmed downwards climate. Our auto climate shows us that thick red dot, confirmed downwards climate, probability to the downside, so that's cool. We then want to figure out, do we have probability of a continuous move to the downside? That's what these numbers help us with. So what this tells us, we're going to ignore this first number for now, and we're just going to look at this number, because that tells us how often this market usually comes down for on a daily chart. So what that tells us is that normally this market comes down for 5.39 candles, and around that up. So 6 candles, it will move to the downside before it may change direction. Now, this is obviously based on averages and statistics. Of course, it can go to 8, 9, 10 or more. Of course, it could be 1 or 2 and change. This is just telling us what usually happens, which doesn't mean it's something that always happens. But again, it just gives us a little bit of statistical advantage here to say, okay, normally this market goes down for 6 candles. We've currently been going down for 4, which means we have probability of a continuous move to the downside, at least for a couple of extra days. And again, it might go past that. So again, these things are kind of lining up for us. Now, if we've decided that we're going to go short, we have probability to the downside and probability that it continues to the downside, which, by the way, I always write this up, so I think it's important to know. That is question number 1. Should I be long, short, or do nothing? We should always be asking ourselves that question. So same again, if you're trading anybody else's strategy or any other technology, it's important to be able to answer that question, whatever it is. Should you be buying, should you be selling, or should you do nothing? And hey, doing nothing's actually okay. Rather do nothing and save our time and money than waste our time and waste our money placing trades for the sake of it. So that's question number 1. We've already answered that with our autopilot. We should be looking to go short. Now, question number 2, and let's maybe make this one a little bit bigger because that's what we're looking at here. There we go. Question number 2 is going to be, if long, where? If short, where? Just because we've got probability to the upside or to the downside doesn't mean we just click buy or sell right now, whatever the price is. That would be a very subjective way of trading, because you're trading at whatever the price is that you happen to be looking at. And what's the chances that the time of day that you're free to look at the charts is the best price for you to get in or out of something? So again, we want to be a little bit more objective about it, a little bit more mechanical about where we're getting in and where we're getting out. So this is where UFOs come into play. So again, the company is called Trade with UFOs. So hopefully this, if you're new, this is making sense as to why we call it that. These UFOs, these little flying saucers, although they're UFOs, and you might think unidentified flying object, what they actually stand for is unfilled order. So what that means is, at this price, around about this price, and we've got the prices on the side here, so we've got the bands will highlight the price areas. We've got a level in the markets where there are likely to be stacks of sell orders. Now, if there are stacks of sell orders waiting, so they're unfilled, they haven't been filled yet, they're just waiting to be sold. So if I press buy or I press sell, that goes into the market as a buy or a sell order. If I say price is 1.3226, but I don't want to sell it until it gets to 1.3243, that becomes an unfilled order. It's a limit order that's waiting to be filled because price isn't there yet. So we have sell orders around about that UFO. We also will have, delete that, but we also will have here buy orders around this UFO and around the other UFOs. So we're using the UFOs to show us where we have likelihood that there are buy or sell orders that are likely to change the direction of price. Now, you might be thinking, hold up, if I switch this as well, there are loads of different sell orders, loads of different buy orders. Which one do I pick? Do I trade all of them? Depending on the broker you use, or I want to be tying up margin every time I place a trade, or which one's better to use? This is where we layer in a third element, which is our EMA value. So the EMA stands for exponential moving average. And what the EMA is it's a line that tracks the average of price. In this case, we're using the 9 EMA, which means it's tracking the last 9 candles, the last 9 data points, to then give us an average. Clue is in the name moving, it's moving with price. It's taking price data, which means price moves up, moving average moves up. Price moves down, moving average moves down. So it's kind of tracking price as an average of the last, in this case, 9 candles. Now, why is that important? It's important because everybody pretty much in every part of the world with any Forex broker or any broker really, or any platform will see a moving average indicator, which means there are many people out there that are using it to help them with their entries. So a common thing to do, maybe let's just unswitch this a little bit just to really show that. A really common thing to do would be if price is below the moving average, so moving average is here and price is here. If price comes up and meets the moving average, and the moving average will move up a little bit, but price moves quicker than the average, of course, because it's got to take other data points into account. So if price comes up, meets the average, people sell. So lots of selling goes on at this point. If price was above the average, again, this is just a normal thing that people do. So let's say price was here. Let's say price was here and the moving average is here. Let's say price were to come down, moving average moves up, and they meet at this point, then people would be buying. So if price is below the moving average and comes up and hits it, people sell. If price is above the moving average and comes down to hit it, people buy. It's a very sort of common technique, I guess, out there. It's not just retail traders or sort of normal people, as it were, that are doing that. You also got people that are hedge fund managers or fund managers in general that will also be looking at an average price for when they decide to get in or out. So point being, as price meets the moving average, for various reasons, you're going to bring in sell orders. What if that happens to be at the exact same time that we also have, for other reasons, a big stack of sell orders, as highlighted to us by a UFO? So now we have sell orders coming in here and sell orders coming in here in an environment where we have probability to the downside. It's checking things in our favor. It makes this more likely to work. Now, could it be that it just so happens that if price were to come up and hit this and hit the EMA and people were selling, that there wouldn't be a huge stack of buy orders that would come in and push through that? Yeah, that's possible. That could happen. But it's less possible or less probable considering we have a lot of sell orders coming in. You'd have to buy a lot to push through those, which is why we line these things up together. So again, hopefully this makes sense, guys. Again, let me know in the chat box. Again, I know people are particularly quiet in these rooms. I don't know why, but just let me know in the chat box if this is making sense. So we're lining up climate, i.e. trend, basically, probability to the upside or downside, with UFOs that correlate with that. So a sell UFO if we've got probability to the downside, or a buy UFO if we have probability to the upside. And we want those UFOs to coincide with the EMA value. So in this particular case, the EMA value is 1.3242, which is literally just underneath this UFO. Now, the rule is we want the EMA to be enveloped by the UFO. So we would want the EMA to be somewhere in the middle here. But as we've said, it is a moving average. It moves with price. So if price were to come up to meet this entry, the likelihood is this EMA would move up a couple of pips as well. So I'm going to take this trade because I think the likelihood is I would be very surprised if it didn't line up. If price were to move up from here and hit this UFO, I would be very surprised if the EMA didn't also line up with us at the same time. So we're going to take this UFO. Now we've got a slight problem here in that we have many UFOs on top of each other. So if I just look at the numbers there, so yeah, we're probably, what's going to end up happening. So I'll just talk you through what I'm thinking here. So let's say we were to get in here at this sell UFO, and that would be our entry price. Our stop would go above the UFO normally, because if price has moved through a big stack of sell orders enough to eat all of them up, we want to get out because we're probably wrong, right, at that point. So we'd put our stop above that. But in this case, our stop would fall within another UFO, which means we would be buying. That would be our stop loss. If we sell to get in and we're buying to get out, we would be buying in amongst other sell orders, which doesn't quite make sense. If there are lots of sell orders, we want to be selling. So maybe we put our stop above that UFO. But then if we give it a little bit of wiggle room, which we should be doing on Forex, then it falls within this UFO, which then means our stop loss is more likely to fall somewhere here in the white space. That's where we want it to be. So that then means that we'd have a slightly bigger area. It's not necessarily a bad thing. However, we have, so that would be, let's say, between 32.43 to 32.90. I'm just making that up just to make that, you know, we would actually figure out the numbers, but just to kind of make my point. So let's say that was 50 pips or so. If it was 50 pips, our safety target has got to be 50 pips away. So it's going to be roughly around about here, which is 3,200 roughly, 3,200. Now, why is that a problem? Because on the bigger time frame here, we have a UFO really, really close by. It starts at 1.32114. Just going to use a different color. I'll use green to show you where roughly that will be. So what that means is our final target, which is what this UFO would be closer to us than our safety target. And that doesn't make any sense. A safety target is meant to be there so it's really, really close to our entry, so that we're more likely to at least break even than for price to simply just come against us. So even if it goes a little bit in our favor, we still have probabilities that we're not going to lose. Now, if our safety target is further than our final target, then essentially what we have to admit is there's not enough room in this trade. Price, if it were to come in, get this stack of sell orders, including with the EMA, including with the probability to the downside, and then start to move away, before it even hits the place where we are safe, that's what the safety target is, it's going to hit a big stack of buy orders on a bigger time frame. The bigger the time frame, the bigger the stacks of orders normally. So we'd have, 55-minute sell orders competing with daily buy orders. And that's it, it might be that the climate wins and pushes through that. It might not. We have less probabilities here. So before it even hits safety target, it's hitting a big stack of buy orders, which means it's more likely, if I can get rid of some of these, it's more likely to come down, not hit our safety target, and then move up again. And then overall, the trade is still a loss, because we'd have taken less than 1-to-1 and then lost 1. So we'd still overall be at a loss. So again, not enough probabilities here, not enough room to validate this trade, based on the fact that we'd have to widen our risk between our entry and stop in order to make sure our stop doesn't fall within the UFOs. We want it to fall outside the UFOs. That makes the area or the zone too big, meaning our safety target would be further than our final target. That reduces our probabilities of actually having even a break-even trade. So not worth it. So hopefully that makes sense as to why we ruled out this trade in the end. Again, there are different variables that we need it to hit in order to be okay with the probabilities, enough to be able to waste our time and money doing it, right? We don't want to waste our time and money putting trades on when we don't have probabilities of it hitting our targets. So that's why we ruled out this trade in the end. Again, you guys let me know if that didn't make sense. I'm happy to re-explain it. Let me know if it did make sense as well, so I can check that we're all good and we're all on the same page. So no problem. If we have a situation where we don't have probabilities enough in our favor, we just come back to our trusty scanners and we move on to the next opportunity. Now, when it comes to daily opportunities on a daily chart, we have daily climates here and daily climates here. We've just looked at this one, which unfortunately didn't line up with our target placement. We didn't have enough room to take profit really out of that trade. And the other ones have grey boxes, meaning less probability, no probabilities one way or the other. So we're done with daily climates. We're now just going to move to a different climate or a different time frame for our auto climate. So it's going to be this one here is the one we're going to look at. So 240-minute climate. That is the one that we're going to look at, because this is the next one down that has probabilities enough for us to be even wasting our time looking at it or using our time looking at it, because it has a red box there. So we're going to go to the US dollar, Canadian dollar. And sometimes, guys, it might be that you spend some time looking through, it might be that you spend some time looking through charts and then you realize that you don't have enough probabilities and you don't place a trade for the day. Especially with swing trading, where you're going to have less opportunities because of the nature of the fact that it takes longer for the new candle to form, and therefore longer for you to really have probabilities that appear again within periods of time. It might be that you don't place trades in a day, and that's fine. Better than placing trades for the sake of it with a higher probability to lose. So let's have a very quick look here. So this one might be a little bit difficult, and I'll tell you why. So we have Thick red dot, confirmed probabilities to the downside. Notice I used a 4-hour chart, so 240-minute chart for the climate, which meant I changed my entry chart, my UFO chart, to a 21-minute time frame. So they correlate. When I use daily, I used 55. Now I'm using 4 hours, so I'm using 21. So if we're now looking here and we have our confirmed downwards climate, we also see red UFOs, happy days, but it's got to line up with our EMA, right? We need to make sure if we're going to be selling that we're adding probabilities there. By the way, the stats also tell us that we have room to at least move for another day or two to the downside. So the EMA is pretty much just above price now. So the EMA is at 1.2587, which is roughly here-ish. Now, the issue with this is that our UFO is at 1.2595. So it's a good 7 pips-ish above that. Again, this is a smaller time frame. So it might be that price is here right now. If price were to come up, yeah, perhaps the EMA would move up and coincide, but it's less likely. You know, yeah, it's not, to me, that's not enough for me to say, yeah, okay, I can predict that that would happen. So what you could do is put an alert on, kind of really close to price there. So maybe if you put an alert on at 1.22590 and then see what the EMA is doing at that point, we're more likely to cross the EMA to get to the UFO. We don't want to do that. We want it to line up at the same place. I could be wrong, which is why I'm saying you could put an alert in to then let you know, hey, you're getting close and the EMA is doing what you want it to do. So cool, you would then go and place that trade real quick. But again, for me, not enough probabilities there, or not enough. I wouldn't be too certain that we would be lining up there with our EMA if that were to happen. I'm just gonna, for some reason my UFOs disappeared, put them back on. Okay, so no problem, we'll come back to the scanner and we'll look for another opportunity. Now again, we have none on the 240-minute climates here. Again, over here, we have these top ones. That's a near sensible short, but we have a grey box. And then the other ones that might have the box color that we need say hopeful. We don't want it to say hopeful. So we're going to move down again another climate or another time frame. So we're going to look at a 60-minute climate. So again, these are going to be sort of almost kind of day trading, really, day to very short-term swing trading. So if I'm doing 60 minutes on my left, I'm doing 8 minutes on my right, and I'm going to see whether or not we've got things lining up. Now, again, in this particular scenario, we have a confirmed upwards climate. So again, probability to the upside. We can see here that usually price would go up for 5.25 candles, which I'm going to round up, call that 6. So it goes up for 6 candles, but, and we're currently on candle number 2 to the upside. So we have probability for a continuous move to the upside. There's a couple of things I don't like about this. And again, I will explain it. So first thing is, on our bigger time frame, on the hourly chart, we have a big stack of sell orders starting at 2595. Oh, hold on, I'm on the wrong market. Again, let's double check that. So we are meant to be looking at US dollar Canadian. Oh, so we are looking at the right market. Okay, don't worry. Ignore that. Okay, so mean what I said before then. So we have sell orders here at 1.2595, which is kind of here. Current price is here and the closest UFO is here. So the EMA being where it is in this place, which is 1.2576, which is maybe here, and current price is here. Price is likely to cross the EMA before it hits the UFO. So that's one thing we don't like. We want those two lines to marry up, right? We want them to be around about the same place. So no point putting on a trade where we're likely to have those things not line up. The other thing is that it wouldn't have very much room to get to the upside there and hit our final target. We've not got a lot of space there. So again, we could place this trade just for the sake of placing a trade, just for the sake of making the time feel useful. I care more about what is objectively useful, what's an objectively efficient use of my time. It doesn't make sense to use time to place a trade that doesn't have probabilities on its side, because you're likely to lose. So then you've spent the time and you've lost money, which I don't know about you guys. I would rather not have spent the time at all and have saved the money. So let's go back to the scanner and see if there's anything new developing here. So nothing new developing there. What we might do, because we don't have 60-minute climates on our right-hand side here, so on our cross pairs, so we could perhaps just scan through quickly for a couple of cross pairs. Let's have a look at, let's have a look at maybe, I don't know, let's have a look at the Euro Aussie, just as a random thing to look at. Again, I could program them into the scanners there, but just having a quick look here. See on this one, just again make the point, our closest sell UFO is all the way up here, and the EMA is sort of here. So no way, no way would the EMA line up by the time we get to that. And also by the time we get to that, it may be the climate has gone from down to up. So again, we move on. You guys let me know in the chat box, by the way, if you have on smaller timeframes here, using the hourly for our climate, the 8-minute for our auto UFOs. So again, it's kind of swing trading, higher end of day trading, lower end of swing trading. You let me know in the chat box if there were particular currency pairs, cross pairs that you want to look at. Otherwise, I'll just circle through them, just randomly, one by one. But again, if you have ones that you want to be looking at, just let me know and we can again use that time better. So in this case, again, not working out because we have our EMA at 6695, which is just below us actually, so it's kind of here-ish. No UFOs around there, UFO down here. So we'd have to cross the EMA by the time we get to the UFO, not what we want to be doing. Let's have a look at the pound Aussie. Okay, so here, again, this is a different example and again, a good use of the technology here to show you what we mean by these things. So this is showing us an unconfirmed climate, meaning we don't have probabilities one side or the other. So what's the point? Why would we place trades where we don't have probabilities one side or the other? So just a very quick look at the dot here can say to you, don't bother, move on to the next opportunity. Let's have a look at the euro pound. Okay, so we have a confirmed downwards climate here. Again, probably unlikely to work out when it comes to the EMA. So it looks like we've only just crossed that EMA to the downside. The EMA is roughly here. Closest sell UFO is there, price is here. So again, likely to cross the EMA by the time it gets to the UFO. We don't want that to happen. So again, we'll move on. So like I said, guys, if there are particular cross pairs that you want to be looking at on these time frames, let me know. Otherwise, I'll circle through them and again, just show you how we're using the technology to even rule out opportunities. Again, it's a quicker thing. It's not like we have to be looking and analyzing each one of these markets individually and going, did it cross that? Did it do that? Did it make that pivot? Do we have an area that looks like this? It's just technology. This is telling us very quickly. Thin red dot, don't bother. Thin dot, lack of probabilities, move on. No problem. Let's do Euro Swiss. Okay, so again, before I even change the other chart, thin red dot, lack of confirmed climate, so move on, no problem. Let's have a look at the Aussie Yen. Okay, so with the Aussie Yen, let's see again. All right, so we have here our EMA is 83.76, which is kind of here. And our UFO is all the way down here. So again, we'd be very likely to cross that EMA to reach that. What I was going to say as well, by the way, just before we move on, just to make a point on this, and again, help you guys to use the technology, if you do choose to use it, moving forward, is we have these statistics here. So the statistics that we have here tell us, this first bit tells us, if I just highlight that in a different color, this first bit tells us how much or how many candles this market usually moves up by. It tells us it as a decimal place because it's doing averages and doing calculations. So we always just round that up. So call that 6 candles. This second bit tells us how much this market or how long normally this market goes down by. So again, telling us a decimal place, but let's round that up to 5 candles. Now, so what we can see here, we would have a confirmed upwards climate. Normally the market would go up for 6 candles and we're currently on 22 candles to the upside. which means we've more than surpassed what is usual, what is likely on this market. So again, we would lack probabilities of a continuous move up. If we want to buy, we want it to go up after we buy it. Same the other way around. If we were going to sell it and it would normally be going down for 5 candles and it's normally, and it's now on 30 or 25 or whatever, lack of probabilities that it continues down. So again, we would tend to keep away from that. So I'm seeing Euro US dollar. I'm just going to quickly go to my scanner to have a look there because we've got Euro US dollar here on the scanner. So I was looking at cross pairs because we don't have a scanner for 60-minute climates. So what we were looking at here is, let's take the Euro US dollar. On the 240-minute climate, it's not near enough to an ideal trading price, meaning it's not close to our EMA. So we wouldn't want to take it there. If we look at it on a daily climate, it might be a near sensible long, but we actually have lack of probabilities on the climate. So lack of probabilities one way or the other. So we wouldn't be looking at that anyway. And then on the 60-minute climate, the Euro US dollar is here. And yes, we have a thick red box, and yes, we have a sensible short, but it's not highlighted yellow, meaning it's not near. Now we could go and have a look, and just I'll talk you through what I mean by that. So Euro USD on a 60-minute, and then Euro USD on our 8-minute. So yes, we have a confirmed downwards climate, probability to the downside. Great. Our EMA is 1.2141. So this is what happens, by the way, when price moves quickly. When price moves quickly, it moves far away from our EMA. And remember, our ideal entry price is at the EMA. At the EMA when coinciding with a UFO. So as price is moving quickly, because the EMA has got to catch up, because it's still looking at 9 other candles there, or 8 other candles, you know, the current one and then 8 others, the average isn't catching up as quick as what price is. And so let's say price continues down, EMA moves like this. It's got to come all the way back up before you start selling that. For it to come all the way back up, it might be that the climate has changed. It might be that EMA isn't lining up. So at the moment, the EMA is here, kind of roughly where I drew it over here. And again, we've got a UFO below it, UFO way above it. Price has got to come up a bit, and if it comes up a bit, the EMA is also likely to move up with it. So again, it might be that this opportunity is a good one to do. Just it's a really good point. I'm glad you made that point, by the way, Estuardo and John, about the Euro US dollar. At least this is how I think about it and how we do things at Trade with UFOs. Of course, there are different ways of thinking about things. Normally what happens is price is shooting down, shooting down, shooting down. It's moving, it looks attractive. And so we go, right, we've got to get in on this. We've got to be selling it. Which means you've sold something that has objectively already got much cheaper very quickly. Could it keep going down? Yeah, that's possible. But is it likely to be a good idea to be selling something after it's objectively cheaper than it was 5 minutes ago? Wouldn't you rather sell it at a higher price? If you're selling anything in life, wouldn't you want to sell it for as high a price as you possibly can? Rather than sell it because it's going down. If you sell it because it's going down, you're selling it cheaper. Same as if the opposite was happening. If we saw this huge rally upwards, people are going, oh, it's going up, it's really shooting up, let's buy it, let's buy it, let's buy it. It's FOMO. Yeah, good question, John. So should we be looking to buy around the UFO buy lines? That's a very good question. So one of the ways you can use the UFOs is to be saying, okay, if this is coming down, coming down, coming down, what's going to stop it coming down? So essentially it's getting cheaper and cheaper and cheaper. If something's cheap in life, you tell me, guys, what do you want to do? If something's cheap, do you want to sell it or do you want to buy it? If you're hoping to make money on it and it's cheap, you want to buy it. Exactly. So why would we be looking to sell something that's getting cheaper? We should actually be having a look exactly as John suggested there. Is there a place where we might have probabilities to buy? Now, there are a couple of things that you can take into account here. This is a bit more advanced way of using the UFOs. But what we could be doing is saying, okay, at this point here, we have buy UFOs on the bigger time frame, so on the hourly chart. So we've got an hourly downwards climate, but we have hourly buy orders. What is likely to happen is price comes down, hits buy orders. We've got buy orders on top of each other. It might not react to the top one, it might react to the next 2 or 3. But it's hitting buy order after buy order after buy order after buy order on its same time frame. Which means those buy orders are much more likely to compete with the climate because they're on the same time frame. So what might happen is price moves down. This number then gets more because it will probably take another hour or 2 or 3 maybe to get there. We've now come to the end of statistics. Normally this market goes down for 5 candles. Let's say it's on 5 or 6 by the time it hits this UFO. So now we have probabilities of a change in direction based on climate. And we have buy orders coming in, which also give us probability of a change of direction. So there are a few ways you could do this. You could say, right, I'm going to place my entry here and my stop below these UFOs, which would probably be here on a bigger time frame. And do you know what? To go from 88 roughly to 58, that's 30 pips. That's not a huge amount of risk. Or what you could do, which means you buy it at a slightly higher price, which is less favorable, but would add more probabilities. As price comes down, let's say it hits these buy UFOs, maybe it spends a little bit of time here, and then it starts to go up. When it starts to go up, our climate is now saying to us, hey, you have a confirmed probability to the upside, and you'd be on candle number 1 out of 6. So the climate is now saying to you, now you have probabilities. Then what you want to do, at this point, I'm going to use a different color for our EMA. Our EMA may have done something like that. So at this point, what you want to then be doing is having a look at our 8-minute chart and saying, let's say I'm making up the number, I'm just using this as an example. If it's 1.21, we might be saying, okay, are there any buy UFOs around that place? And hey, if there are, so price would obviously have had to come through this first and then come back up. So maybe it creates a new UFO. There we go, a new UFO. If it does, great, because now you have everything lining up the way that you need it to. You're buying it cheaper than it was up here, cheaper than it was here, cheaper than it was here. You're buying it cheaper. It's had to go up a little bit for you to get a confirmed probability to the upside, but you're now layering in confirmed probability to the upside, UFOs, room to move based on statistics, and your EMA, which gives you probability after probability after probability. You could say, I'm going to delete all those and start again. You could say just rudimentarily, sort of basically, this is where we have stacks of buy orders after buy orders after buy orders. If the stats run out, so if on the way down, it normally goes down by 5, we get to 5 or more on its way down, then I'll place this stack of orders. I'll place a buy there. Buying it cheaper, it's moving down into an area that's cheaper. It would be like realizing, by the way, if we just come back to this concept, it would be like realizing that something that we own is on sale and it's half price than what we bought it for. And we go, oh, it's on sale, everybody's selling it, we should be selling it too. And then we go and sell it on sale, cheaper for what we bought it for. We would want to buy it. If you bought a TV for £500 or $500 or whatever currency you use, and then that same TV is on offer for £250 or dollars or whatever, you go buy that second TV and then sell it again once it gets more expensive. So think about it in the same way in the market. So Ray, if he's still with us, doesn't look like he is, he'll be very aware of this kind of way of thinking as well, that as price comes down, it's getting cheaper. As price goes up, it's getting more expensive. Think about it the way you would anything else. And then look for where you have probabilities lining up to make that worth your time and money to place the trade. So hopefully that makes sense, guys. So thank you, by the way, Eswada and Ron, for suggesting the euro for us to be looking at that, and for sort of engaging a little bit on that. Hopefully that makes sense in terms of why you might buy at this price and how you're going to use the climate there to help you figure out whether or not that's going to be a good thing to do. Notice, by the way, as we've been talking, it's going to just prove my point. It was coming down, and it's like, look, it's coming down. It's now on its way back up again. Now it's on its way back up, about to hit some sell UFOs, but the EMA's sort of here. So it wouldn't be surprising if price moves through that and goes back up again. Also wouldn't be surprising if it hits the UFO and comes back down. Not enough probabilities either way. But kind of proves my point that as it got cheaper and cheaper and cheaper, and people are jumping on board selling it, it's probably a better idea to buy it. Again, whether you do that at UFOs or whatever, this happens to be that it hit a smaller UFO and did that. which again shows the power of these UFOs. It shows the power of where orders are likely to change price. To me, you don't want to be competing with a 1 hour downwards climate with an 8-minute stack of orders. It's like David and Goliath kind of thing. David was the anomaly. Goliath beat everybody before that, right? You might have the odd David, but more often than not, the giant is going to win. So if you have a downward climate on a bigger time frame, I personally would not risk my money hoping to break that climate with a small UFO, even if sometimes, like we see right here, even if sometimes that works out. So obviously we didn't find any opportunities today to actually place, which is a shame, but also, you know, we're following what the data is telling us. We're following what is probable in the markets. We don't place trades for the sake of it or just to fill these sessions. Hopefully there's still something that you could learn out of this today as to how we're using the technology, how we can use it to follow a climate, how we could potentially use it to go against the climate, providing that we're putting probabilities on our side. That's where we want to be placing our trades. So I'll give you guys 30 seconds or so. Let me know if you've got any last minute questions or I don't know, any feedback, if it did make sense, if it didn't make sense, whatever, let me know. Otherwise, we'll round off. Just to let you know, just whilst I'm giving you time to type in the chat box if you need to, the Auto Climate app is a free app. So you can download that. If you go to the tradewithufos.com/Becky, get yourself a free membership. You can follow through from there, download Auto Climate on either TradingView or TradeStation, and it's a free app. Our UFOs, Auto UFOs, are paid for apps. It depends what platform you use as to how much it costs. On TradingView, they're $34 a month. With any of the courses that we do, if it's Forex, stocks, futures, whatever, you get 3-month access to the Auto UFOs anyway. So again, you might just want to use the free Auto Climate and just help you out with making that decision one way or the other. Do I go long? Do I go short? And then you might want to use EMAs, Fibonacci's, crossovers, whatever it is you use to help you with your entries. For us, it's UFOs. Hopefully it makes sense as to how we use it. Just to show you guys here, came down, hit this buy UFO, went up, hit this sell UFO, came back down. That's exactly what we expect them to do. And again, you could just take all UFOs as they are, but we want to be ideally layering in extra probabilities there with our EMA so that we've got more likelihood of that trade going in our favor. So we have less likelihood of losing, which we don't like to do, right? We don't like losing as people. Okay, good. All right. So I'm just checking the chat box. Thanks, Suado. Hopefully I said that name right. Good luck, everybody, in the rest of the week in your trades. Hope it goes well. I'll be back in a couple of weeks' time, so I'll see you guys then. In the meantime, happy trading. Have a good week and take care. Bye-bye.